Hey guys, good morning.
What's up, Scott?
Hey George, how are you, bro?
Good. How are you?
I'm pretty good. Woke up about an hour ago, looking at these markets. I think I've got some interesting things to say. I hope I do.
Hey, Scotty.
That's great.
Tom, Scott, all I want to know is when is this thing coming up, man? When is this thing coming up?
Okay, so the bottom line, the first thing, I know that's what you want to. I know that's what you want to know.
Let's hear it.
I think we've got a little bit more pain, and I think we're close to a bottom, but
Below 40?
I think it's going to tap 40. Is what I think.
It already did.
Not on my data. I think it's.
I see 46.11 on TradingView.
Yeah, I think we're probably going to tap 40,000 for real. So, okay.
Oh,
So let's start from the basics and what happened here. So we had a very strong bullish move. Everything looked nice. Closed up at all-time highs. Little pullback, which was bought. Closed again at all-time highs. This was a leverage wipeout, and too many people had bought in the dip, so there was no more dip buyers to step in when leverage
You're not
buyers.
showing your screen.
Oh, sorry, man. Thank you. Hey, Thomas.
Hey,
All right. So let's start again. So main highs completely fucked. July 19th, new bull market, made new closing highs and all-time highs, little pullback. The form of the pullback was in a two-legged pullback, which is normal. We have strong move to close at all-time highs. And then big drop, retest, and wipe out from there. This wipeout didn't stop at a one-legged wipeout. You can see that there wasn't enough buying pressure to step in here, and the selling pressure took over. And at this point, we have the market looked like it was going to bounce here. Like at this point, it looked like a good move off the lows. It looked like this was actually a good point, probably even to go leverage long. Especially here, it looked like it's not going down. Then we get one bar that's a surprise bar down. Whenever you get a surprise bar, that's probably going to result in a bigger move in the opposite direction. So we have that bigger move, which is, this is a crash bar. So it's a crash bar in two stages. It's a crash and then a recovery and then an attempt to go down, and we found some stability. Now, this is going to take some time to...
Please stay on the line. Your call will be answered in the order that it was received.
This is going to take some time to play out. So here it looked like we were soaking up selling pressure, where we were soaking up selling pressure, soaking up selling pressure, soaking up selling pressure. We have the smallest candles that we can see, which is usually a sign that the selling pressure is weakening. We have a move up, which fails to break out and forms a trading range. We know that 80% of trading range breakouts fail. This one still looked like a trading range, still looked like a trading range, still looked like a trading range. Oh, fuck. That ain't no trading range anymore. So this move caught everyone by surprise, because what they were expecting was this, and then more. Well, but instead they got this. So when you get something that you don't expect, it tends to cause a panic reaction, and that panic reaction is exactly what we're seeing. So we're seeing an exaggerated thing. Now, the big test, as we've just passed the daily bar, is this is the capitulation lows. Did it close above or below those capitulation lows? And you can see here, It's closed just below. This substantially weakens the bull case. If we were here, I would say everything's okay. I'm not going to bullshit you and say that doesn't make things worse, because it actually does. So treating things very simply, if we close below there, the next line in the sand, which really should hold, is here. It can touch here. If it closes below here, that's probably going to weaken the bull case enough that some institutional investors who are going to get fired if it goes wrong will start to puke. That has not happened yet. So let's look at that's Bitcoin. Let's look at the small time frame stuff, and then let's drill down a little bit. And so trading range, you can see the moment it broke through the trading range, it's like, oh fuck, we got to get out. We have an attempt to find the bottom, which failed. A second attempt to find the bottom, which failed. Capitulation leg down. This one was while it was touching. This. So this is like somewhat of a critical level, right? So this level, because it's here, sits heavily in the minds of both the bulls and the bears. It's if you're a bull and you get to buy at this price, that's a high probability buy point. If you're a bull and you're nervous, this is probably where you want your stop loss. So what I want you to point out is you can see how these candles got small and now the character changes. See how we've got big up, big down. So this is stops being triggered, dip buyers getting in, people puking out, like we've got a tug of war for this level. The tug of war for this level looks like it's being won by the sellers. Why? Because we've closed below this line. Now, what are we looking at to find a bottom? We're looking for a change. First of all, we're looking for leverage traders to get wiped out. Sorry, I got bronchitis. So I think it's pretty safe to say that every leverage trader in the world is going to get wiped out, which is fine. That's kind of good because those guys are dicks anyway, and leverage traders exist to get wiped out. So we want to see signs that leverage cascade is over before we jump back in. So the first place that I'm going to look for that is what we call the Bitcoin futures perpetual funding rate. I'm going to drop this down to a very high resolution. And you can see this is a very strong edge. It's an edge that exists in FX markets. It exists in futures markets, and it's an edge that exists in stocks. So this is called carry. So the concept of carry is if I get paid to own an asset, if the asset goes sideways, does nothing, and I get paid to it, effectively I get paid a dividend. So that can happen with, say, a carry trade Forex currency like AUD JPY. It can happen with a Bitcoin perpetual futures where either the longs pay the shorts or the shorts pay the longs. So red fund, or it could be a stock paying a dividend. So if we look at red, the times when funding is negative, those are capitulation events. Why? Because the shorts are, when perpetual funding is negative, shorts are paying longs to bet that the market goes down. So if the market goes sideways, the longs still get paid even if the market doesn't go up. And you can see that when we get big capitulation events, that's generally around the bottom. So we got a capitulation event. We got a capitulation event here, and then things started to rally for a bit. We got a little one, but still here on the hard right edge of the chart, it's still looking pretty funky. Now, if we look at that across different exchanges, this is not the same in all exchanges. And what I'll show you is that, for example, Binance Perpetual Futures is fucking with them. So I want to show you how different these look across exchanges, and that's just an average. So you can see that Binance has the most retail traders, right? And most retail traders are relentlessly bullish. What we're waiting for is those dumbass retail traders. Whereas if we compare this to, say, BitMEX, it'll look a little different. So you can see that in this same period, the BitMEX exchange has started to show signs of bottoming, whereas Binance hasn't. Now, if we look at this across all the exchanges together, so we overlay them, so you can kind of see what's happening. It looks like a bit of a mess. So this is price. This gray line here, this black line is the average, and the average, we're looking for something like this or like this to spike down to be the end. Now, the same as we saw the spikes up tend to be the end on the other way. If we zoom right in and we look at what's really happening, so OKX from the top is moving up a little bit. Binance is about flat, which is the orange bad boy here. Bitfinex is flat. BitMEX is green one. Huobi is negative but turning positive, and Kraken is this one. So overall, we don't see a capitulation event that would let me find one in the past. There we go. So what we're looking for is something like this, where all the derivatives exchanges, the funding goes negative. Now, what this only happens when derivatives traders are getting wiped out. So we want another one of these, and that will most likely happen when leverage traders give up going long and instead try and short this bitch and say it's below support, we're going to short it, it's going to zero, it's going to whatever. As soon as the crowd flips to short, this thing will probably reverse, because that's the way things work, right? Okay, so let's have a look at some longer term stuff here. Okay, so this is a Z-score run over the difference between the cost basis for Bitcoin. So we say, like, at this point, what was everyone's cost and what was the price? And then a Z-score is dividing it by the standard deviation of the daily returns. So what you see is we spike at tops and it comes down to this zone around bottoms. So these tend to be cycle bottoms, and these tend to be cycle tops. And where are we? You can see that the interim top in May was a little bit of a spike, but not enough to indicate that the bull market was over. We pulled back substantially and we're retesting the lows. So where are we here? We're nowhere near a top and we're also nowhere near a bottom. And I think that's important to understand. Now, this bull market was kicked off by the capitulation event in March 2020 when Bitcoin crashed, when the broader market crashed because of coronavirus. You can see this is the exchange balance, and the exchanges had been accumulating more and more coins, clogging up their systems for years and years and years, and this changed. The amount of balances on exchanges went from 3 million Bitcoins, over 3 million Bitcoins, 3.6 or whatever, down to 2.5. So 500,000 Bitcoins left the hands of exchanges and went to hodlers. This reversed in the bear market, reversed again, looked like we were gonna have a new bull market. Now, if we zoom into the hard right edge of the chart, what do we see here? We're seeing this going up is bearish. This going down is bullish. So even though the market is going down, we've got some bearish price action and we've got some bullish price action trying to find a bottom, has not found a bottom. And just at the hard right edge of the chart, you can see the exchange balance is going down again. Now let's drop down into a 10-minute view and let's see how that's holding at the hard right edge of the chart. Okay, so as price has gone down the last couple of days, let's just move it right in. So price has gone down. Exchange balance is almost exactly unchanged from where it was. So really nothing we can see there.
Yes, I'll bring it tomorrow.
Okay, no, that's not relevant for us. Let's look. Okay, so this is the Bitcoin hodler net position change. So this is people who've bought their coins and taken them off exchange. They're making it difficult to sell, and you can see that when this goes down, it's long-term holders selling their coins, which typically happens at the end of bull markets. You can see it happened at the end of this bull market, the end of this bull market, this bull market started to happen here, and then long-term holders were selling it all the way through this 2017 run. Long-term holders puked a bit here, took profits here. So you can see that when long-term holders are peaking, it's a very good sign that the cycle is changing. So we want to look for signs of this bullshit coming on the hard right edge of our chart. That would be very bearish. That would change my opinion on the market. So let's zoom in and see what we see. So here, long-term holders selling out, taking profits, long-term holders buying back in, starting to take profits, you know, bought at 29, sold at 40, like that's a good profit. Long-term holders accumulating about flat, starting to take some profit. Long-term holders are accumulating. So what this tells us is that the long-term structure of the bull market is still in place. We've got we've got a situation where leverage traders are taking it right in the ass, and long-term traders are taking advantage of that to accumulate more Bitcoin. So let's look at the estimated leverage ratio, and I'll zoom out a bit so we can see a bit more. So this is the estimated futures leverage rate ratio. As collateral gets wiped out, the leverage ratio goes up, right? So let's say that I've long 10 Bitcoins and I put down 1 Bitcoin as collateral. Like that's my margin. My 1 Bitcoin goes down in 20% in value. My margin is just shrunk. So I'm putting less collateral. So my leverage ratio goes up. So what you can see is that we have very high leverage conditions, higher than So you can see at this last bottom here, we have this, sorry, my bad. This is a leverage wipeout. This is what you want to see for a bottom. Now we're higher. We had a leverage wipeout here, and we've got higher leverage there. This market is really very fragile. I wouldn't buy it today. I would wait for that knife to fall, stop, and get in. Why? Because there's too much danger. As soon as the leverage is high, if you imagine how a leverage trader feels compared to a guy who's, okay, let's consider a guy who bought Bitcoin at 65,000 at the highest. Bitcoin's sitting at 40,000. He's taking it right in the ass. That's a problem for him. He's not happy. He's hating it, but he's fundamentally not in danger. The only danger is him selling out and before it recovers. If you bought your 1 Bitcoin on margin at 65,000, you're in danger of, and you put 1 Bitcoin down as deposit for that, you're in danger of losing your whole stack and ending up with absolutely zero. So this is a terrifying situation and amplified for anyone who's in leverage trading. And the leverage traders, you can see that leverage traders got wiped out and aggressively bought this dip. Okay, now the next thing that we want to look at is there's 2 types of leverage. There's cash margin. I put up 50,000 I put 50,000 as collateral to buy my Bitcoin, and I'm doing that on margin. If Bitcoin goes down, my 50,000 collateral is still 50,000 collateral. It's cash collateral. So it doesn't affect me like it does if I put 1 Bitcoin up as collateral and then the value of that Bitcoin goes down, I've got less collateral. So we want to look at the difference between cash and crypto margin futures open interest. All right. And let's drop that right down. Okay. The leverage, the cash margin leverage wiped out. And you can see here, as it starts to go up, that can only represent dip buyers buying the dip on leverage, right? Those dip buyers are still haven't backed off too much from that aggressive position. a little bit of a drop is going to fuck those. But those cash margin guys are much safer. Now let's look at the crypto margin guys and see how that's different. So it'll probably be quite different. Okay, so let's zoom out so we can see a bit. Okay, so this isn't so bad. So this is the crypto margin interest is still very low. So this is all in, we've got high leverage, but high leverage only in cash margin things. And you can see that the crypto margin, these guys got their ass handed to them right here, and they are still too scared to get back in the water. So big shocks like this one, big shocks like this one here happen from crypto margin. So what percent are we running at here? So we're running 41. Okay, so you can see up here at the main top, we were running 70% crypto margin. Here we got up to 48%. Now we're at like 42%-ish crypto margin. So that's very low. So that's not as vulnerable to another crash as it was before. Let's look at liquidations. Okay. So we don't want 10 minutes for that one. It's easy to see, Dave. Okay, so what we want to see close to the end is liquidation events. So we've got, that was a liquidation event, that was a liquidation event, that was a liquidation event, that was a liquidation event. Let's zoom in. Okay. So what we can see clearly here is that long liquidations really hit a peak there. A big peak, bigger than we've seen for quite some time. But not the biggest we've ever seen. I would say where this could be a bottom, but I wouldn't bet on it. Now, okay, so this is Ethereum. I'll start with Bitcoin and we'll move to Ethereum. So this is a really important chart. So if you want to know, are we in a bear market or are we in a bear market? This is how you tell. Now, consider the 2017 bull market. In a bull market, traders are, this is the amount of profit on this side that traders are getting. So this is 2% average profit, 4%, 6%, 8%. This is losing money on average. In a bull market, traders are generally unwilling to sell out at a loss. So what happens is they sell out when they're back to their buy price. But if they get underwater, they think, if I just hodl on, that's going to come good. And so they stop selling. Now, this is the clearest guide to what traders are thinking. Are we in a bull market or a bear market? So you can see in the 2017 bull market, markets spend most of their time with traders selling out for a profit. And then occasionally the market resets and they sell out and they stop selling once they're starting to make a loss. And then they, most of the time in the bull market, and then they stop selling when they make a loss. And most of the time selling for a profit, they stop selling when they make a loss. So this is the clearest sign that we're in a bull market, right? The opposite is true in a bear market. Let's look at how a bear market behaves. So this was still bull market behavior in here. Now in the bear market, which happened from here through here, traders spend most of their time selling out for a loss and occasionally think they've come good and then go back to making a loss, and occasionally come good and go back to making a loss, occasionally come good. Most of the time making a loss and occasionally coming good. And it's axiomatic that the biggest loss happens at the end of the bear. So how does that fit with us? After the capitulation lows and the Corona crash, March 2020, we have a little bit of shaking out and then clear bull market behavior right from the start. So most of the time in profit, most of the time in profit. And then here, everything changes. And this section here is most of the time in loss. Here, definitely bull market behavior again. Now let's zoom in and see what we see on the hard right edge of the chart. So if we don't transition to a bear market, this should spring back fairly smartly. So I would say that this is probably a coin flip, and you couldn't call it bull market structure again yet. Now let's see if that's the same in Ethereum. So until yesterday, Ethereum looked like it was really holding the bull market, like very definitely this is classic bull market behavior. The last 2 days, not so sure, could be either way. Now, the next thing I want to look at is how is the rest of the market holding up? I might just reload this. One sec. Actually, I might take questions for up to this point. Any questions on any of that stuff so far? Okay. So we're going to go back to this date, which was the 4th of December, and we're going to look at the structure of the altcoins that we follow through this. Now, what we're looking specifically for, we're going to have winners and losers. What is winning and what is losing? Because that gives us a really, really clear guide as to what might catch us by surprise and be the next moon coin. So let's go back to, change this to 3 minutes. So let's go back to the 4th, which was the big low. And you should see everything spiked down on here. Just make sure that was the low. Okay. So you can see this was the major capitulation event for alts. And we're just going to put this on the hard right edge of the chart. And we're going to look at, this is our universe of altcoins. And we're going to see what's been winning and what's been losing. So for a start, Ethereum is, where is it? Oh, it's Doge. Where are you, Ethereum? All right, Ethereum is down here. So Ethereum has done poorly compared to other altcoins. Ethereum was down 5.5% against Bitcoin. So this is the break-even point against Bitcoin here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So a small percentage of coins are beating Bitcoin now. That is not as bearish as I would think. Like, that is not as bearish as I would think. Let's zoom in a bit further. Look at yesterday and today. That's yesterday and today. So Gnosis, Link. I mean, Link is a bad laggard. It's up 10% in 2 days. Sushi, bad laggard. These guys are all shit. Bitcoin Cash, Comp. These are okay. So what we're seeing are previously bottom of the pack coins holding up better. That is not particularly bullish. When we see a bottom, the first thing that we should see when we find a bottom is that people get excited. The storm's passed. Fuck, this is a great dip buying opportunity. I want to buy the shit that I wanted before that I couldn't get my hands on. So what you should expect people to pile into is the coins that they loved. So they should be piling into the AVAX and the Sol and the Luna. So let's have a quick look at those. Let's look at them against Bitcoin so that we can. Okay. So AVAX market darling, not too much of a hit. Luna market darling, reasonable hit, but not the end of the world. Sol market darling turned into a sideways trading range, almost certainly going to tag the bottom here. At this point, are there any? Okay, I'm gonna take some questions here. Judy, yes, I will look at EGC. Let's look at it quickly for you. Okay. This gap here is people FOMOing into the coin, and it closing right at the highs is no one selling out. And then this candle is everyone selling out at once. And then further people giving up, trying to find a bottom, and it going down again, trying to find a bottom. That's a failed pump. This one looks like it's going lower. I would expect it to at least trade to here. Warren, if we aren't close to a bottom, would it be advantageous to switch some BTC USDT into BTC ETH as a partial cushion? Okay, this is important to understand. There is no such thing as BTC USDT. It's not like FX where AUD JPY is different than GBP JPY. The convention is the first 3 letters are what you buy, and the last letters are what you pay for it with. So BTC USDT means you're buying Bitcoin, paying for it with tethers. BTC Ethereum means you're buying Bitcoin and you're paying for it with Ethereum. They're the same exact thing. So when you transfer them off exchange into your wallet, it just shows us Bitcoin. It doesn't show us anything else. Francis, I think market makers and exchanges are having a field day with this data and how easy exchanges with like Binance make it to get access to leverage. Very much so. And that's a very insightful point, Francis. And what I want to show you is we nearly always see there's a very big difference between Binance and the other exchanges. Why? It's very easy to get an account on Binance. It's very hard to get an account on Gemini or Coinbase. So it attracts the more retail end of the spectrum. Okay, I'm going to change this to Bitcoin. And so because of that, and because of another phenomenon, which is that there's a significant time of day difference, the Asian session, which and Binance has mostly Asian buyers, are net sellers. If you track just the Asian session this year, you would have lost money. So it's been a perfectly great way to make money to only hold during the US session. You wouldn't trade off that because that's probably going to fall apart. So if we look at the leverage ratio, it's at 20% on all exchanges. Let's look at Binance by itself. No, it's not too high. So between 20 and 19. Okay, that's about normal. Let's look at, say, FTX. Jesus, 91% leverage ratio in FTX. Those guys are fucked. Okay, from Thomas, let's look at PBX. It's held up really well, dude. Like, this is a small coin trading on small exchanges. The market's got absolutely crucified, and it's lost about 3 days worth of value. Like that's a stinger. That's a great result, Thomas. Great result. I would be ecstatic if I was holding. Okay, so it's probably a good time to talk about the smaller your coin is. Ain't no one going to buy PBX until they're like, that's the safest coin. Where is she? Where is she? Come on. My kid was crying at my door. No one's going to buy this while they still think the market might crash because they know it'll wipe out. So she can come in if she wants to say that. Yeah, so that's held up reasonably well. So small coins get washed around in the gravitational pull. So when a coin goes down, when the broader market goes down, you can't really hold that against it. Like that's just actually what's going to happen. Kartik, does Sol represent a buy signal if it gets a bottom? What I'm worried about Sol is that if we look as a general proposition, this is a long-term chart of Sol. It's gone from $1 to $250, right? In 3 moves. 1, 2, 3. Now, this is the class, like I don't like Elliott waves because it's 90% bullshit mixed with 10% truth. But the 10% truth of it is that there's an idealized form of a rally, which is 3 legs. And the middle one should be the biggest, and the last one should be second shortest and steepest, which is what we're seeing here. So, and the pullback should be corrective with lots of overlapping bullshit. And so we've got something that fits the idealized pattern of an Elliott wave. Not that I'm endorsing Elliott waves, and I'd encourage you not to learn about Elliott waves. But there's a grain of truth mixed in with the shit. So this is a potential played out sort of market. And what I'm worried about is the first part of the first, all the bull markets so far have really been layer 1 coins. Like if you want to make a slam dunk easy coin to buy, you bought all the layer 1 coins. You bought Luna, you bought Sol, you bought AVAX, you bought all the layer 1s have done fantastic. I don't think the market is going to make it so easy as to say, hey, buddy, just wait for it to stop going down and just buy these layer 1s again. I think the market's going to trick us because markets tend to rhyme and not repeat. So it could be that metaverse coin bullshit. It could be layer 2 coins. It could be something else. And typically at the start of a new bull market, we'll see new leaders come into play. And so what I'm going to be looking for is when the market finds a bottom, which coins bounce hardest and first. Those, if we see some sort of consistent pattern, like if we go back to July 19th, let me show you what I mean. Let's go a couple of weeks after that. Warren, I wouldn't short anything in this market. I think shorting high volatility things is extremely dangerous. Just wait for this chart to load. Paul makes a very interesting point in that the why are you not loading? We'll just try loading it again. The coins that have held up the best have actually been NIA and FTM and Atom. Let's change the date here. Yeah, Paul makes a very interesting point in that although Sol, AVAX, and Luna have been beaten down, other newer layer ones like One Near and FTM have held up rather well in Atom. And that is a very, very insightful point. That could be the sector rotation that we're expecting to see play out. So maybe it's not actual sector rotation. Maybe layer one coins are like still the hot shit, but maybe it's just a different set of layer one coins. So what I'm worried about is the market doesn't tend to make it easy. Like the coin that mooned last time probably won't be the coin that moons next time. That's just not the way it works. Because why? Because dumbasses get into the coin when they see it going up, they fall in love with it, they don't sell it. Then they get stuck in it, and then there's bag holders, and then there's a drag on performance. Yeah, this chart does. I'll give it another minute, but it doesn't look like it's going to load much. I know what I'll do. All right. So if I move the start of the cursor to, that's July, I'll move it about halfway through. So this was the start of the new bull market. So which coins have done best? Sol, Luna, Doge. Doge has done surprisingly well in the second part. Oh no, sorry, wrong. April, May, June, July 19th. There we go. Okay, so this is since the July 19th lows. What are our coins that have won? AVAX, Sol, Luna, and Atom and Ontology to a certain extent. Look at Luna. Right from the very start, you can see that Luna was already outperforming. AVAX, right from the start, was starting to rise up the top tables, and here it really broke out from its peers. Sol was outperforming its peers by here, was in the top rank, and then it really started to streak away here. At this point, you know, in August, it was apparent that Sol was going to do that. So my point is that we're going to get this same clue again. Why are we going to get this same clue? Because we always get this fucking clue. Like, we just always do. So if we move to here, what we want to be looking for is when we find a bottom, which one of these squiggly lines can start to break up and bust out of the rest. And Link, which has been a terrible coin, is a possibility. Okay, Stu has an excellent question about which about which level of holders are driving the price action here. So first of all, this is a measure of everyone together, what percent of profit, and you can see that super bullish 100% in profit, super bearish 50% in profit. Where are we now? $74% in profit. So roughly we're halfway between bull and bear. So we're not super bearish like a bear market cycle low. In fact, that's telling us that we haven't entered a bear market. Let's look at the number of whales. Okay, so whales started selling out aggressively before this top. Whales have been buying aggressively the whole bull market. They've banked some profit and they've maintained, but haven't sold out the last whatever. Let's look at the hard right edge. And are the whales selling out? They were there, they're back to here, down to there. Can't read too much into that. Now, let's look at distribution. So let's look at shrimps. 0.1 Bitcoin to 1 Bitcoin. Okay, shrimps were aggressively buying that dip, got it wrong, and they're getting out a little bit. Bitcoins holding between 1 and 10 Bitcoins have increased their supply and just starting to puke out a bit here. So there's some capitulation of stronger hands here. This is 10 to 100 Bitcoins. Okay, so the 10 to 100 Bitcoins are aggressively buying this dip. 100 to 1,000 are aggressively buying this dip from the last few hours. And they also bought this dip and bought this dip again. So 100 coins to 1,000 coins and 1,000 to 10,000. Let's zoom in. Well, actually, let's zoom out first. So above the July lows, but the 1,000 to 10,000 aren't seeing it at all. And the other thing that I want to look at is stable coins. Okay, so in the same way Tether tends to print coins to flood the market, to prop the market up. So we ought to see around the bottom, we ought to see Tether just flood the market with liquidity to try and jack the price up. It'll be clear market manipulation when we see it. And let's have a look. And let's kill that. And let's kill that. Okay, so when the stablecoin supply ratio goes down, it's bullish, and Tether does that at bottoms to kind of prop the market up. And you can see that the stablecoin printing is the longest it's been for a long time. And let's look at that turn into an oscillator. Okay, so low readings are more printing of stable coins. You can think of it like Federal Reserve printing, and high readings tend to happen at tops, right? Low readings, high readings. Where are we? We're halfway between, neither fish nor fowl. Not at a top, not at a bottom. Okay, I can take some questions now. You can unmute yourself and ask questions, or type them in the chat, up to you. Okay, Flux is still okay. I mean, Flux is a small coin. You would expect this. I'd be astonished if this didn't happen. Let's look at D-Race. Yeah, this one's got to go. Okay, I'm going to have to issue a sell warning on D-Race. This one's not okay. Yeah, thank you, Judy. So anyone who holds D-Race, this one has to get out. Let's look at WaxP. Wow, held up surprisingly well. Hasn't dropped below the capitulation lows. That's very bullish. Thank you, John. Let's look at Woo while we're here. Okay, so let me explain what we're looking for here. So all these altcoin charts you're going to see, they look the same. Capitulation lows, people thinking they've got a bargain, and then it fucking around. You're going to see two things. One set of coins have held above the capitulation lows. They're the strong ones. The other set of coins have held below the capitulation lows. They're the weaker of the two. Some of them were weak and found a bottom. Some of them were weak and like falling away. So let's look at an example of a coin that's the same basic coin as WaxP, but you can see that it broke the capitulation lows. Now it's fucked. This thing's got to go. Okay, so overall, let's look at, good point, Grant. You want to, okay, this is below the capitulation lows, but it's going down with a lot of overlap. So this is weaker than WaxP, but I wouldn't sell out of this one yet. Why? Because there's just such significant overlap between each bar and the previous bar. It's not accelerating to the downside. It's getting weaker to the downside. I think this one's just okay. Woo, strong move off the lows, holding up pretty good. Yeah, Woo looks good. That's really held up well. Okay, so let's look at the overall thing. So let's put it in context. After a close below this low, we should see people giving up. Like people should give up, sell out. Now, I noticed that two of my long-term and very good traders, like guys who I would consider like legit pros, tapped out on this market yesterday. And the last time that happened was this day here. That was the last time that I had experienced traders tap out. Usually, what do I think? I think we're within a couple of days of a bottom, but I don't think the bottom is today. I don't think the bottom is in. I think we're within 2 or 3 days. That's the like, if that's what you wanted to come here and hear, I don't think it's today. If we close above here, that changes things somewhat and makes it more bullish. I think the highest probability is going to be a really scary drop from here to here, and then a very strong rally from here to here. And I'm just going to leave that on my chart so that we can come back and revisit that and see how close or not close I was. So what I think is probably going to happen is that. Now, when that happens, what we want to look at is two things. One, did they just buy Bitcoin? Or did they buy the whole ecosystem? Did they buy Bitcoin, Ethereum, Sol, Luna, AVAX, microcaps? If they buy everything, the small caps, the layer ones, the weird new layer ones, the FTMs, if everything's being bought, extremely bullish. If it's only buying the hot shit that they think is like slam dunks, medium bullish. If it's just Bitcoin or just Ethereum, not bullish at all. Does that make sense? Okay, let's look at NIA. Tap out means give up, stop trading, sell everything, go home. Okay, NIA looks fucking fabulous. You know, gone through a full-blown crypto crash. We're expecting a pullback to here. The pullback only got there. And look at this. Hasn't. Okay. The concept is everyone's looking at the market going up or the market going down. What does Bitcoin going down do to a coin like NIA? Punches it in the face. This coin is being punched repeatedly in the face and it's still standing. That is a very strong coin. STX holding up reasonably well too. Let's look at FTN. Let's look at it against Bitcoin first.
Did we look at Woo already?
We did, but we'll look at it again. FTM, this is amazing price action in the context of weakness. You know, so it's one thing for a coin to go up. It's another thing for a coin to go up while it's being punched in the face by the rest of the market. Very strong coin. I think this may be the standout moon coin of the next generation, of the next leg. This is looking like it too. Steve, how far back do you generally go to determine capitulation lows? The last panic event. So capitulation happens after a panic. So where are the signs of panic? Like panic, like, oh fuck, this was a terrible idea getting into crypto. That day was a terrible panic day. This was a terrible panic day. This was a terrible panic day. This was a terrible panic day. So capitulation panic isn't super common. Let's look at Link, which actually, before we do that, let's look at FTM on a USD Tether basis. I just want to take a still holding up. Link. Boy. You look at that. So Link is a coin that was first out of the gate from May 2020 to August 2020, it just like 10x'd, and then it's been fucked. very, very strong out of the gate. I've laughed at this coin before, but this is okay. When we see this behavior, how strong are the link bulls? This candle, the bears, the sellers were unable to drive it below the low of this bar. The sellers were unable to drive it below the low of this bar. The sellers were unable to drive it below the low of this bar, this bar, this bar, this bar, this bar, and this bar. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row that the sellers are weak. Now, if you think about this as a competition between buyers and sellers, like a video game, you store up your power and then you use it. The bears are weak because they've been continually trying to sell out and push it down, and it continually hasn't working. So two things happen when we see this sort of price action. The first thing is that there's people all around the world thinking, well, what about Link? I wonder what about Link? I want to get in Link, but no one wants to buy Link here today. No one's got the balls for that. People want to buy it on a pullback. Why? Because it feels great to buy it a pullback, just the same as it feels great to buy Nikes on sale. You're getting the thing you want at the price you want. When this pullback doesn't happen, like the guy here wants a pullback to here, doesn't happen, he starts to think, fuck, I'll get it the next day. Pullback never happens. I'll get it here, I'll buy it here. Never happens. But, shit, missed out. And what happens is these guys get really horny for a pullback. They're like, I want this coin now. I really fucking want to buy some Link. I just don't want to be the sucker that's buying the top. And that's the way everyone thinks. Really want to buy this fucking thing. I don't want to be the dickhead who bought it here. That's it. That's front of mind for everyone who buys an altcoin that's going up is, I don't want to be that guy. So what this means is that whenever you see the next pullback is almost certainly to be bought. All those guys who missed out here are going to jump in and buy it, and we will get a second leg, almost certainly. And so what would that probably look like? Something more or less like this. Now, things are somewhat different when you're recovering from a bear phase. So every coin in the market's taken a punch in the face. Some of them get up off the canvas pretty quickly, like Link, like FTN. And if you're trying to decide, where do I put my money in? It's a much easier decision now to decide to buy Link than it is to decide to buy something that's still going down. So these coins get like a following breeze. They get like they get both a head start. They get a breeze behind them. They get people in, I'm not the only guy doing shit like this. Like there's people on calls everywhere saying, what about Link? I've had 3 messages. What about Link the last couple of days? In fact, I can show you. And I thought, oh, it's well fucked because I haven't looked at it because it stopped following because it was so fucked. The standout for me so far, I thought was going to be Curve. So let's have a look at that. Again, held up exceptionally well. CRV Curve. This looks like it's at all-time highs, except for this. So the things that I think are probably going to move in the next phase, NIA, FTM, CRV, I think. Let's look at Matic too. Okay, so I thought last week that this would probably happen. Didn't quite get as low as I thought it was going to go. This has held up reasonably well considering it's an altcoin and considering, yeah, I think Matic is one of the stronger ones. All right, let's look at the chat. OMI, let's look at OMI. Okay, this is not too bad. I mean, OMI is just a tiny, tiny coin. You have to expect this. It's still above the capitulation lows. No, that's fine. Yeah, I'll hold that one. Algo, George. Let's look against Bitcoin first. Okay. I don't like to see too fast mooning, because whenever you see a coin that goes up like triples in value in a couple of days, that's people FOMOing in, and people who FOMO in are kind of dickheads, because you have to be a bad trader to FOMO in. And when you're a bad trader, when things don't go your way, you puke out. And that's what's happened. It's holding up well. It's showing signs of life. I wouldn't quite trust it yet, but yeah, it looks pretty good. ENJ and REN. Lara, Link does look like it'll keep going up. And actually, Link looks like it's going to go up faster than other things right now. Okay.
Guys, I got to jump off this webinar, but let's hope we get a bottom tomorrow and we'll see bullishness the rest of the week. Have a great night, okay?
Thanks, man. See you soon, bro.
See you soon.
All right. Okay, Engine, one of these gaming coins. It's held up kind of pretty well. Like this was the market going down. It's not really going down. Let's just quickly look at Mana and Sand. I mean, look at this. Like Mana is going up while this shit is happening. That's pretty bullish. Sand is holding up reasonably well. Like, it's not certainly not crashing. It's where it was like a couple of weeks ago. One, a very interesting coin. Boy. Okay. So this is a coin to watch. Anything that goes up while everything else is going down is by definition something that people are looking to accumulate, even no matter what. Like, even as the market's crashing, people love this shit. So, Grant, what does it mean that Bitcoin is taking it hard, but other coins are doing fine? What it means is that what we're looking for, if we want to predict this, is we want to see what's the clue of why does this happen. Now, the clue is after the market crashes, because this market is constantly in a cycle of booming. Wow, we're all going to be rich. Crashing. Oh, we're completely fucked. We're going broke. What you want to look for is what is the phoenix rising from the ashes. So as the market turns around, so right here was when the market turned around last time. And what's the first coin out of the gate? Is this fucker. Right from the very start. And then it did this. Went up 850% from there in a couple of months. So this is why we're paying close attention, because one, FTM, Link, NIA, a couple of others, these ones look like they're really, 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 really solid. Good question. All right. Gala, Mask, and Silo. Not bad. See, it's held up below the capitulation lows. It's probably going to maybe tag here again. On a tether basis. This one's okay. I would hold this. Get USD tether first. Again, I would call this about an average. I would call this like a C average. So not the best, not the worst. Wouldn't sell, wouldn't buy. Look at this. CeeLo holding up very well. Tia, that is an incredible question. And let me show you. The best way to identify these new altcoins prior to mooning is to make a big ass list of coins. And let me give you a list that I use. I'll post it in the chat. So I'm posting in the chat the list of coins that I use. And let me show you. Actually, I'm just going to go to the bathroom and I'll show you how I make this chart. Give me 2 minutes. Okay, so to make the best way to do this is to make a chart that looks like my squiggle chart here. And what you want to do is you want to take the squiggle chart, which I'll show you how to make in a sec, and you want to zoom in and zoom out with the scroll wheel on your mouse or by pinching if you're on a phone or iPad. And you want to put it at the start of whenever the new market lows are. So drop that down to a 2-minute chart. And we'll put everything on there, and you can see really, really clearly, oh, fuck, Link, you just stand away from the pack. KNC, actually, we should take a look at KNC because it is standing away from the pack. And so what you want to do is be very alive to the idea that the early winners have a head start in the race. What coins do people want to buy? Like, I don't think too many people, as a percentage wise of people, like there are some people who really, really believe in the technology and I really believe in this coin and this is the future of money. But most of us aren't like that. Most of us just want to get paid. And so most of us want to buy the things that are going to make us rich, and they really don't want to hold the things that are going to cause us financial pain, right? So any coin that starts to go up early has an inherent advantage. So I've got 1,000 coins I could buy with and I've got a bag full of money. What am I going to buy? I'm going to buy the shit that's already going up, like this, like Link, like whatever, and everyone is. So how do we make this coin? First of all, you go to Trading View, you change this to line. Now, what I suggest you do is you make this chart ETH BTC. Why ETH BTC? Because Ethereum is the base. Ethereum is the biggest altcoin. It's the safest altcoin. In my view, any coin that is underperforming, any altcoin takes more risk than Ethereum. Like whether or not they earn more money, they definitely take more risk. So it's one thing to say this 1 cent shitcoin beat Ethereum by a lot, but how did it beat Ethereum? It beat Ethereum by taking more risk. So the first thing that you want to do is click on this compare button,